So, welcome back, friends. We are about to commence trading for the world financial markets for the week beginning June 29, 2026. The world stock markets currently are standing at crossroads. There is a great amount of hope because oil prices have been declining for quite some time now, many weeks. It's come down from a high of close to $120. Now, Brent crude just stands a little above $70. And this easing of oil prices has led to expectations of the easing of inflationary pressures. However, there has been over the last 3 days once again another flare up of geopolitical tensions between the four countries United States, Iran, Israel, and Lebanon, which has once again ignited fears of rise in oil prices and therefore inflation. The US Federal Reserve already stands in a rather precarious situation, having to make a decision whether to fight inflation and thereby cause a rise in interest rates, or to let the interest rates be where they are and to allow the growth in the economy to continue, particularly the AI related spending. If this continues the way it is, then the fight against inflation would lose its teeth. The fight against inflation, although has been done quite well and holds a good future, yet the rise in prices of Apple products last week, particularly the MacBook Pro, the iPads, and many other Apple products by as much as 10%, as also rise in Microsoft product prices, all this bodes ill for the inflation picture because these products are widely used across the world, and once these prices start going up, inflation starts going up in other ways. There's another problem which is lurking in the horizon, and this problem is arising from new products that are about to be shipped from Asia into the United States and other Western countries. So far, the Western countries have had old inventory at old prices, but now they're pretty much exhausting it, and new arrivals will come from Asia with a larger price tag. Reason being the West Asia crisis, which remains unsolved. They had to produce goods using these new input costs of oil, of fertilizers, and various chemicals which go into producing these products. That's why you realize that there is a scenario where the products that are coming in from overseas, from Asian countries, will now carry a larger price tag. The very fact that Apple had to increase its product prices on the back of increased chip prices, that itself is a warning of the things that are about to unfold. The new chip prices has been very, very beneficial for companies such as Micron Technologies, which could see its revenues go up as much as 8 times, but its profitability was also higher by almost 80 to 90%, 87% to be precise. So it's good for the chip companies, but it's bad for the companies which are using those chips and various other inputs. They could start getting impacted now. So, friends, this is the scenario in which we begin this forthcoming week. The very important inflation gauge, most preferred Fed tool, the PCE data, was in line with the expectations. So that was not so much of a worry. I think the thing that can trigger A lot of problem is the rise in these Apple product prices, which people are so far not considering or taking so seriously. What they have been looking into is the oil prices going down, and that also looks to be a little precarious because of the unfolding situation in West Asia. You have Iran now attacking US allies Bahrain and Kuwait in response to the US strikes on Iran, also the Israeli strikes on the Hezbollah in Lebanon. So, which means that again we are reaching a scenario where the fragile ceasefire is coming into question. So far, United States has been able to curb all these uh, violations of ceasefire. In a day or two there's a patch up, and once again you have Pakistan and Qatar coming out and saying all is well, and the meeting in Lucerne in Switzerland, and a deal is signed and it's just a few hours away and everything is fine. But after all, how many times can the ceasefire agreement be violated, friends? So we are reaching a situation. I think this week we may see some more turmoil on the geopolitical front, more than most people anticipate, if my analysis is correct on the geopolitical front. Also, you will see some more scares on the inflation front. So all this can keep the markets on tenterhooks. And this grim reality that the Federal Reserve may have to live with a little higher interest rates may translate into at least hawkish tones, if not a rise in interest rates for the rest of 2026. Kevin Walsh is talking about setting up many advisory committees for the Federal Reserve, and that makes sense. But all this itself, by itself, will not be able to, is not sufficient to curb the tendency of having a hawkishness or a hawkish tone on the part of the Fed governors, as they keep talking at various forum from time to time. This hawkish tone of the Fed governors, which may start coming in many talks that they are to give this forthcoming week and the next, is definitely something which can rattle world financial markets. Geopolitical tensions, I don't think, are going away in a jiffy. And oil prices, although have come down, is not going to be sufficient to stem the rise in inflation. All this makes for a rather difficult situation, and the world financial markets, although not completely in trouble, they are not out of the woods at this point of time. In fact, if you have seen the AI induced sell off in AI related stocks, it would be a stark warning that even a small hawkish tone that comes either from the Federal Reserve or from the any other authorities, or even from the inflation gauge numbers, is itself sufficient to rattle these AI related stock prices. AI prices are already ruling at at ridiculously high prices, starting with the SpaceX IPO and the frenzy which has gone with it. So we have reached a situation where the world financial markets can come to the grim reality of sector rotation out of tech stocks and into the beaten down economy stocks, the value stocks, so as to say, rather than growth stocks. We could continue to see movement out of value stocks, out of growth stocks into value stocks. We begin the week starting June 29 with this in mind. We also have a truncated week in the United States because of the 250th Independence Day holiday, and therefore in this truncated week the pressure will be even more as we go further. So I believe towards the close, which would be on Thursday, the pressure can even be higher. Friends, this is my little analysis for the forthcoming week. And if you'd like to know more about the US markets and where they are headed, do join our Telegram group. You can do that by WhatsApping us on 732-732-2720. If you have still not subscribed to my channel, please do that. And if you do like my video, then do like it as well. Happy investing and have a great week ahead. and wish you all a very happy 258 birthday of the United States of America, and may God bless America, and may God bless you all. Take care. Bye bye.